Well, joining me now live in our Lagos studio to discuss this and much more, I have the Chief Executive Officer of Finance with Mukhtar Mohammed. Thank you very much for joining us on the Breakfast Show this morning.
Good morning, David.
It's quite an interesting readout of figures we had there. But the GDP growing at 3.898% shows some level of sustained positive growth. This is the fifth quarter away from the recession. But for some analysts, they still feel the economy is still largely fragile. We have certain indices that show that. We are also now looking at the fact that there's still inflation, there's still subsidy regime, insecurity, we are not manufacturing as much, forex stability is not yet achieved, and a whole lot more. How can we consolidate on all of these figures away from just numbers?
We have to look at, like I keep saying, we'll have to look at the bottom to up approach. And when you look at the bottom to up approach, basically what the average Nigerian need is food on his table. Basically, what the Nigerian youth need is employment. So when you look at these numbers, when you see the impressive nature of these numbers, we should not get carried away because most of these numbers is as a result of the opening up of other sectors of the economy. It's the productivity level that has been opened up. And once again, the fact that crude oil price has gone a little bit high. If you go in depth into that numbers, you remind that oil at that time was doing the last quarter was minus 18.
Yeah.
But towards this quarter report, and then you saw that we got to minus 9. Now, even if it's shrinking, even if it's still shrinking, not giving it so much, the good thing about it is the non-oil sector that did very, very well.
Quite impressive. Very impressive.
But now, those impressive numbers you see in the non-oil sector is as a result of productivity. Productivity growth in those sectors. So those growth will continue, but we need to begin to take it to the next level and see how we can help those productivity growth in the area of employment.
Okay, let's also look at your forecast for the first quarter of this year. Now, we're already down the second month for the first quarter. In terms of your projection, do you see a sharper spike in terms of our GDP performance or some level of plateau, looking at the fact that we also are dealing largely with inflationary pressures day in, day out? The latest is the lingering fuel scarcity. This has a ripple effect on transportation, on MSMEs that have to run their businesses largely on power, which is not available, coming at an expensive cost.
Definitely, David. It's going to have, even the Assistant General have already said it, that we're going to see the effect of this forex crisis on the economy, and not only with those that use power to use their PMS to run, even the cost of natural gas, diesel also has gone up astronomically, very high. I mean, from a low of about 250 within a month to a high about 420. So that means the cost of production has gone up. And then when you talk about the cost of production, that means the burden of that cost will be poured down to the people. So you will see inflation spike a little. And again, the earning capability of the average Nigerian also have not improved. It's still where it is, and even lower, because by the time...
And even government's revenue generation strategy remains the same old approach. So many now are saying we have to think outside the box. And in thinking outside the box, we were looking at infrastructure development through the capital market that brought about Infraco. But now the IMF is also raising a whole lot of concerns. These are not necessarily new. Irrespective of what we are seeing play out in the local economy, it says, well, the debt to GDP ratio has to be attended to, and then our debt dynamics, we just have to properly manage that. IMF and the government have different body languages.
But first of all, let's say the IMF body language. The IMF first of all said that Nigerian government have the capacity to pay their debt, but they are worried about increment in terms of those debt production. Then we need to look at it. We need to come to our own grown economic strategy on how to grow our economy. Over-dependence on oil has gotten us to where we are now. We need to diversify. In diversification, we need to be intentional with our diversification. The problem we have is that we are diversifying in virtually every sector of the Nigerian economy. We are diversifying. We are not diversifying and looking at our competitive advantage. If we are going to agriculture, we are doing everything in agriculture. We are going to this sector, we want to do everything. We are going to, so they need to look again at the service sector. If you look at that MBA, the service sector was one of the most productive sectors in the non-oil sector. How much have we been able to key into the service sector? How much are we thinking of building up infrastructure to boost our earning in the service sector? The service sector is the largest driver of GDP in any economy and the largest employer of labor in any economy. When you get the data from the United States or any economy, you realize that is that sector that drives the economy. What are we doing to drive the economy in the service sector?
Okay. Mr. Mukhtar, just less than 30 seconds to go now because I'm being told we have to wrap up. Now, in terms of your projection, this is a a very heavy political year, so not much is going to change. What's your focus in terms of utilizing our population census to now have a much more sound economic agenda come 2023? The slate is largely gone.
David, I don't have so much confidence in the population section,
Okay.
because I know that there will be a lot of politicking when it comes to that. Remember that governance will take the back seat very soon. So it is going to be a very tough year for Nigeria economically. We are going to see governance take the back seat. Politically will be all the way. Then for the economy, we are going to see a lot of slowing down, and the inflation will come in. And then how are we going to address this FX volatility? That is a major challenge at the moment. And the CBN is already trying to make that issue worse by saying by the end of this year, we will no more give FX to banks. So it's a whole lot. It's a big challenging year for Nigerian economy.
We keep our fingers crossed to see how things to play out day in, day out. Definitely our tabs will be on all of these burning issues. Thank you very much for your time on The Breakfast Show this morning, Mukhtar Mohammed.
Thank you, David.